As cryptocurrencies like Bitcoin and Ethereum continue to evolve, their relationship with traditional asset classes, such as equities, bonds, and commodities, keeps changing. I'm Johanna Bota, and joining me today to explore how these correlations shift with market sentiment, what drives them, and what it all means for investors looking to balance opportunity and risk is Eric Rose, Head of Digital Asset Execution at StoneX. Welcome back, Eric. Nice to see you again.
Great to see you again. Thanks for having me.
So, I want to start with understanding the relationship. How do the digital assets like Bitcoin and Ethereum behave in relation to equities, bonds, and commodities during different market conditions?
Great question. And I think that for purposes of the answer, I may try and separate Bitcoin from other digital assets because we think of Bitcoin and its properties similar to gold. So we do think that eventually the market should view Bitcoin as less of a risk-on asset and more of a risk-off asset, with a higher correlation to gold and a less correlation to tech stocks. That is not borne out yet in what we've seen. In fact, Bitcoin generally acts like a higher beta tech stock than it does gold. So even though it has investment characteristics that mirror gold, it doesn't act like gold. So I think that's something where the market is still using Bitcoin as a high beta proxy. As we've seen with some events that happen on weekends when other global markets are closed, whether it's geopolitical events, Bitcoin will act as a risk-off asset, and that is something that we would think should change to become a risk-on asset in global turmoil. So, the premise of what we think investors should be seeing out of out of Bitcoin, generally hasn't borne out yet, and so that's something to look for. The other thing that I would mention is that as it relates to digital assets beyond Bitcoin, is that we view these similar to kind of tech stocks in the early 90s, where we think that there will be a large amount of investment into this sector that will decouple it from traditional equities and risk assets and kind of move to a higher glide path going forward. So a lot of those things are premise, and what we have seen in reality is actually Bitcoin and digital assets are acting like a high beta tech stock.
Okay. So then what role does investor sentiment play in influencing this correlation between the digital assets and traditional markets?
Yeah, I think very much so that, as to my earlier point on acting like a high beta tech stock, that's kind of where investor sentiment really focuses, is if they're expecting a big move, or if there's some event, the first thing they do is actually go to Bitcoin. And you can see that whether it's approaching news cycles from economic data releases, or other headlines, whether it was the Trump tariffs announcement a couple of weeks ago or on October 10th, digital assets were the first things to move and get hit hard. So investor sentiment certainly drives price action, and that's really what we're seeing.
So is it fair to assume that as digital assets become more regulated and technologically advanced, they start to behave more like traditional finance, or will they remain their own thing?
So I do think that as regulation comes on board and online, and we're seeing that now, regulation will bring security, safety, and investability. Not that these markets aren't investable right now, they very much are so. But there are large swaths of institutional investors who don't participate in digital asset markets at this point because they're seeking clarity from regulators on how to move forward. And once you have that, you do bring in a new investor base, and a much larger investor base. And that investor base will obviously trade their digital assets in line with their other risk assets. So I do think that regulation will certainly spur somewhat of a higher correlation to the other traditional investments.
Well, it will definitely give you a little bit of a peace of mind.
Yes.
So, given how these correlations keep changing, what challenges do investors face then when using digital assets for diversification?
So I think right now digital assets do provide a significant amount of diversification based on the emerging technologies that we're seeing from the blockchain. So when you think about early investing in tech stocks in the 90s, and I like to go back to that analogy, because we were creating new technologies, new forms of communication, the blockchain is bringing that. And so if you're able to, put some of your investing portfolio into these new emerging technologies, you should see some higher correlation, not higher correlations, higher risk, obviously, but also higher returns. And so that's kind of how we view the overall landscape is this new emerging technology, have some exposure to it, and you should see obviously higher risk, but certainly higher returns.
Which kind of brings me to my next question. One last thing that I wanted to ask you. What should investors keep in mind when trying to balance the potential of high returns of digital assets with the risks that comes from their volatility?
Sure. That's a great question. I think that, as we look at the landscape, the important thing I would stress is not to invest in only one digital asset because of the volatility within this ecosystem and the emerging growth of it. That seems like a very, kind of a higher risk than you need to take. A diversified portfolio of digital assets within your portfolio should at least allow you to have exposure to several winners and potentially several losers, but the winners on the upside could be multiples. So I think that having some exposure to the majors, whether it's Bitcoin and ETH, as well as moving down into emerging technologies that you find interesting, or certainly part of what could be the next kind of generation of investments, that type of portfolio construction certainly would make sense.
Understood. Thank you so much, Eric. And thank you for joining us. And thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.